Hey guys, hope we're all doing well. Welcome to a brand new video on the channel. It's going to be a Great British Pound to US dollar case study. I'm basically just going to run through that market, do a full top down and give you both longer and shorter term investment opportunities, as well as tell you exactly what I see moving forward in that market. If you guys enjoy this at all, please let me know, because going forward I would like to make more of these. So let me know in the comments any markets you would like me to run through. So jumping straight into this market, I personally always start on the monthly just to find those major points of interest to watch out for. So the first thing we've noticed is a supply zone within this region. That's where prices recently tapped into before distributing and moving lower. So we understand why that move's happened. So we therefore need to understand where within this move up would our points of interest lie, where is likely that demands to be introduced to the market, where do we need to basically watch out for when trying to be a seller in this move down. First thing I'm thinking of is this little candle here. We will actually be able to refine this as we move lower, but for now we'll keep it as this major candle here, which is where a big sell before buy has taken place. So now we've moved on to the weekly. I'm going to find the exact sell candle, which would be this right here. This is the exact candle that I want to identify. So now we've identified those major points of interest in the market, we can start looking a lot more structurally. So we know that price is distributed here and is likely to continue moving lower till at least this area. As a result, we want to take a better look at the structure, so I'll move down to the daily time frame. So we can see perfectly here the bearish structure has been created, evident by these lower highs and these lower lows. We have recently just broken the previous lower low in the market, which indicates to me that bearishness is to continue moving forward. So my technique of analyzing the markets using my strategy, it's the 3-box strategy. So quite simply, we identify the last impulsive wave, which would be this move. We highlight that, our impulsive wave. We're then looking inside this move down, inside this impulsive wave, for where any unmitigated supply zones lie. So looking at all the previous waves of this bearish structure, we're seeing that the correctional waves are coming very high up in that previous structure. And what it's doing is it's actually mitigating that highest supply zone within the move. Assuming that price will do that again, this is the exact zone that I'd be watching out for. I'd therefore put alerts here, wait for price to tap into it. So what this is it's our higher time frame supply zone. So when this structure, this daily and weekly structure, is ready to continue being fulfilled, this is the zone that we're looking out for. Of course, we cannot just wait for price to trade up to this, because we are looking at weeks in the future and we are intraday traders, so we need to find investment opportunities that are much more short term. As a result of this, what I'll do is I'll drop even lower now and do the exact same process I have just done. So now we're on the 4 hour, we see the same thing within this impulsive wave down, which we identified on the higher time frames. We can see an entire structure within that. So within that move down, we've of course put in lower highs and lower lows. We're going to draw up that last impulsive wave down, which would be this. Again, we will highlight that with that impulsive wave box. And then what we're going to do is we're going to look inside this leg down for where our points of interest lie. So in order to do this, I'm going to have to view this more fractally again. So here I've opted for that 1 hour time frame. I want to give you guys a second to see if you can see where I would put my supply zone within that leg down. So to anyone that guessed it, is this buy candle here. It's the first thing that sticks out to me, and therefore the first thing that should stick out to you. So point of interest there, our heavy buy before major sell-off began. Some of you may have actually looked at this green candle here. However, I believe that this move here comes to mitigate the positions within this area. And in moving lower, we don't really see price return to these areas. So I believe this is the zone we want to look at. So I'd do the same thing again. I'd get an alert set just here. And when price pings into that area, we then go on to use step 3, which is entry confirmation. However, if price is to blow through this, I would then be looking at this high. So this is our invalidation zone of the more fractal structure. So if we draw that on, validation of our lower time frame structure, just as this is our lower time frame supply zone. So looking at shorter term investment opportunities, it would be sales from this region. As I say, if price is to push through this, invalidate this structure, what would we do? That's when we then go back to this original structure we were looking at and hoping for the fulfillment of this supply zone here. So as soon as that area is broken, we then wait for price to touch into this zone and look for those longer term selling opportunities. So you can see now I've done this process twice. We've used two different impulsive waves within both our overall structure and more fractal structure. So even though we are waiting for this zone to be met, again, we're intraday traders, so waiting for this is still going to be quite a while. We could be waiting multiple days just for price to fulfill that. As a result, I am going to bump down the timeframes even lower just to see what's happening here. So at first looks of this, it seems as if price could be ready to reverse longer term. So here I've bumped down to the 10-minute time frame, and what I wanted to do is I've actually replayed price just to explain exactly what's happened here. So the same thing again, this is our most recent impulsive wave down. So we'd have that as our blue box again. We would then look for points of interest within that. So to me, the major buy before sales would probably be this region in here. We could probably move down to refine that, which I will do, and then come back to you. So this is exactly where my point of interest would lie within this move down. We'll now play price out and see exactly what happens. Of course, what we would want is for price to tap into this and reverse. However, because we're on the lowest of time frames, it's much less likely for price to reverse here because we could be trying to fulfill our higher time frame points of interest first. So first things first, what have you noticed is that price did perfectly tap into that region and show signs of reversal. I'm going to go down to the lower time frames now just to show you exactly what happened in here. So looking at this, price would have alerted us the second it tapped in. But looking at this already, this does not seem to me like a distribution because we've had no real manipulation of the highs. What we have seen, however, is this manipulation to lows, which to me could show signs of a reaccumulation. The fact that I'm seeing this already would have told me I do not want to enter in on this sell. We'll see how price plays out because I believe it's going to blow through this zone. So just as we thought, price, after showing readiness to move lower, it blew through our zone. It then invalidated our lowest time frame structure. So what this invalidation has shown me is that we are ready to start producing bullish structure. And the next thing we want to ask ourselves is, where is this bullish structure most likely to take us up to? Now, because we've already done our analysis, we know that the first point that it's likely to reach is this zone here, 95 pips away. So we've got 95 pip leverage to be a buyer in this market. And the second it taps into here, that is when we then reverse the bias back to being a seller. So just to round the video up, I'll explain again exactly what I'm looking for. So as we saw on that 10-minute time frame, we have seen that reversal evident by that lower time frame breaker structure. As a result, we can look for buy positions at least up until this zone. And again, when it comes up to this zone, we'll be alerted. We will then watch on the lower time frames to see if a Wyckoff schematic takes place. If it does, we will look to enter sells. If it does not, we will then wait to see what price does after that. It's more than likely going to invalidate that zone. Once it invalidates, again, we can begin to be a buyer in this market up until this zone. Once it reaches this zone, we'll be pinged, we'll be notified, and then we will use the lower timeframes again to find entry confirmation. So that right there is how we can be on both sides of the market no matter what happens moving forward. It's crucial that any trading strategy you decide to use allows you to do this. You do not want to be stuck on your single bias. So even though the second I loaded up this chart, I knew I wanted to be a seller, we can still find both longer, medium and shorter term investment opportunities, regardless of the side of the market we are on, given that a proper and quality analysis has been done on that market and we've given ourselves that story. So I appreciate everybody watching this case study today. I hope I've given you some brilliant information, some brilliant opportunities to get in on this market moving forward. Again, if you liked it, let me know any other markets you'd like me to run through and do the same thing on. But thank you for joining me, and we'll see you in the next video.